Everybody. Good morning. Good, beautiful spring morning. I think it's warming up a little bit outside. My name's Sam Centeas. I'm the Executive Director of CDFI Friendly South Bend, and excited to host a webinar today with First Source Bank called Accessing Capital. And so before we kick it off to them here, just introduce a little bit about who CDFI Friendly is. So CDFIs are Community Development Financial Institutions, and we were founded just about 3 years ago now to help the local borrowers understand capital needs and help them connect with lenders that are able to meet those needs. And so our work revolves around supporting CDFIs, but also working with our local bank and credit union partners right here in our community. So one of our great initial supporters of this work is going to head up our webinar today and present on great programs that we have from First Source Bank. At the end, we'll mention some of the other resources we have in the community, and then take questions and answers. We'll also use the question and answer feature on the webinar function, not the chat function. So make sure you take a look at that. So before we start, I got a couple other announcements. I always make a quick announcement in Spanish. So gracias si estás con nosotros hoy día y necesitas ayuda en español. El seminario hoy día va a ser en inglés, pero también CDFI Friendly y First Source Bank tenemos ayuda en español si lo necesitan. So por favor, mandar un mensaje y te podemos conectar. So I always like to do a Spanish message at the beginning of our programs that both First Source Bank and CDFI Friendly can support you in Spanish if needed, and just send us a note and we'll make sure we connect you. My other quick housekeeping notes before I turn it over to the First Source Bank crew here is that we are recording this webinar, so we will put it on our website afterwards to access and share. So another way for folks that missed it, or if you got great information here that you want to share with others, you'll be able to do that. We will use the question and answer feature. It's easier for us to manage than just chat. So while we're talking, take a look and find that. Also, we'd like to just be able to present straight through without too many distractions. But please feel free to put a question in there when you think of it, so you don't have to wait till later. You can just pop it in, and then at the end, we'll have some question and answer time, and we'll get to your questions. So they'll be listed in the order in which they came in. I know I like to, when I have a question, I like to ask it right away. So just write it in the chat and do that. And so we'll get to those all at the end of the program today. So without further ado, I think Mark Gould is going to be our MC for the First Source Bank folks. I'd like to introduce Mark. First Source Bank has been a great partner and supporter of our work here and trying to bring some financial justice to South Bend and our region. And we've been happy to one, have their support, but two, partnership in working together on creating some positive change in our community. And so, Mark, I'll let you take it away and work with your team.
Great. Thank you so much, Sam. And thank you for hosting us today. Thank you to CDFI Friendly for hosting First Source, inviting us to share some of the flexible flexible loan programs that we have available. I think one of the strengths at First Source is we have an array of flexible programs available that maybe the community is not fully aware of. So we're pleased to be able to share some of these programs today. I'd like to introduce Ryan Bell, who manages our small business market area, an expert in SBA lending and small business lending and such. Jose Miranda is joining us as well. He's a mortgage loan originator based in South Bend, but I believe he covers multiple areas within our footprint. But he really focuses on flexible mortgage products and programs. So great to have him aboard today. And then Andrea Morton manages our consumer lending area. And she's also based in South Bend, but works throughout our footprint. But I'm really pleased to have Andrea join today. And I think first up, or she would like to discuss our credit builder loan program that we have available on the consumer lending side. But I'll turn it over to Andrea.
Well, good morning, everybody. I'm pleased to present to you the First Source Bank's Credit Builder Loan Program. Our Credit Builder Loan has helped so many clients in this area. It's designed for those with limited to no credit history at all. We've helped so many people in our area start their credit as a young person, or also as well as build their credit after some sort of negative event, such as a bankruptcy. You get, caught up in collections, things like that. This is very useful for those types of clients who are wanting to repair their credit or have no credit or limited credit history. So I'm going to talk a little bit about the features and the benefits of this program. It is an installment loan. with a fixed interest rate and term. And it is secured 100% by a First Source Bank certificate of deposit funded by the loan proceeds. So what that means is if you apply for a credit builder loan, let's say $1,000, and this loan will help you build your credit over the next year to year and a half to 2 years, instead of giving you the loan proceeds at loan closing when you sign the documents, the money is held for you in a certificate of deposit earning interest. And during the time frame, the term of the loan, which could go up to 3 years, during that time, you're making monthly payments. And those monthly payments are applying to the loan, paying it down as you go. And at the end of the term, at the end of the maturity date of the loan in 1 to 3 years, at that point, you've paid the loan down, and then the loan proceeds, whatever is left in, or whatever is in that certificate of deposit, that $1,000, you get at that time. A lot of our clients have felt that, or we've helped clients, first-time home buyers, things like that, or someone that doesn't have credit history. This may be a good first stepping stone to get a mortgage. Is if you don't have any credit, possibly look at a credit builder loan. So again, instead of taking the money that you're applying for at the beginning of the loan, it's sort of like a savings account. And at the end of making the payments back, you get the money. So there's no loan processing fee charged. There's no prepayment penalty. And like I said, the funds become available at the end. A First Source checking account is required to have this type of a loan. We'd love to get business help you with the full relationship, your full financial picture. So besides the credit builder loan, looking for a deposit checking account to also go into that. And any First Source location can help. We have, so many in the area and surrounding area. You also can apply 24/7 at firstsource.com, where you can apply for a $1,000 loan, and we'll call you within the next business day or within 4 hours of that business day, and assist you over the phone or via online. So it's a great credit builder program. Great, like I said, great for young adults just starting out. And great for those who are wanting to repair their credit after certain negative events. So I could take questions at the end, Sam, or if anybody had a question now, I wasn't sure how that would go.
Yeah, Andrea, I think we're going to take questions at the end, but thank you so much for bringing this program to everyone's attention. And just full transparency, as you mentioned, Andrea, First Source requires a checking account really for all of our loan programs, products, just to be transparent there. So, but I think, thank you, Andrea, for this information. And then the next program that we would like to introduce is the Community Development Mortgage Program. And I'm going to have Jose provide information on this product.
Thanks, Mark. Good morning, everyone. I'm Jose Miranda. I'm a mortgage loan originator here at First Source Bank. As Mark mentioned earlier, I cover most of the footprint for South Bend and Northwest Indiana and Michigan as a bilingual mortgage loan originator. So hablo español. I liked your introduction, Sam, and talking Spanish there. I appreciate that. So our community development mortgage is a 100% financing of purchase price or appraised value mortgage. What that means is it's a no money down mortgage. And then we finance up to 100% of whichever is lower, the appraised value or the purchase price. It is a fixed rate product, which is really nice. There is no variable interest associated with it. So your interest rate that you lock in is your interest rate that you get through the life of that mortgage. We do allow use of alternative credit for applicants with non-traditional credit, meaning if you don't have credit or a credit score or no trade lines, we are able to build alternative credit using 3 trade lines. And what I've done in the past is, my favorite is rent, because it shows good payment history or that you can sustain that debt. But I've done it with things as small as Netflix and Hulu and smaller subscriptions. Now, while we allow use of alternative credit. There is no minimum credit score for this program. So, if you have a lower credit score, we take a look at all the factors that go into that, and we make a decision based on your overall credit history. There is no PMI. PMI is a private mortgage insurance. Private mortgage insurance is a product that protects the government or institutions in case of default. So this loan doesn't have PMI associated with it, which saves you some money as a client on the overall monthly payment. Something that's awesome that we offer is loan servicing. We service 100% of our loans. So many times if you get a mortgage somewhere, you close the deal and you buy your house and you move in, and 6 months later that you get a letter in the mail that somebody else is servicing your loan and you have to call them to make your payments. Well, with First Source, you can always call us, and through the life of the loan, we service that loan for you. There is no prepayment penalty, so you can pay this mortgage off as quickly as you want, and I recommend it. Making one additional principal and interest payment per year cuts 6.5 years off of a 30-year mortgage, saving you, thousands to tens of thousands of dollars in interest, depending on the mortgage size. Applicants can use community grants, gifts to reduce the loan amount. So something we're going to talk about here shortly is the HOP grant. HOP grant can be used to do a principal reduction or lower your loan amount in this particular loan product, but you can also use other grants that the community offers, whether it's La Casa's IDA Dream Saver or Real Services IDA. There's many different programs that, luckily, where we live in South Bend, there are grants and opportunities out there and money to be had for buying a home. Limited to borrowers with household income equal to or less than 80% of the area median income. So what that means is we're looking for this product to support our low to moderate income buyers, and the average median income is dependent upon household and the county in which you apply in. So I think St. Joe County is right around 46,800, or it was up until recently, for a household size of 1. So if you meet that criteria, then you are eligible to use this no money down program. It is available for refinancing. So if you are in a situation where, maybe your credit isn't the greatest, but you need to refinance for whatever reason, whether it's debt consolidation or other factors that go into it, this product is available for you. And as we've mentioned already, we do require a First Source checking account because we want to not just do your mortgage product, but we want to help you with a car loan, a credit card, investments, things along the line, and build that financial relationship with you. And I think that's all I got.
Okay, great. Thank you, Jose. And Jose, you had mentioned the Homeownership Opportunities Program, the HOP program, and our next slide goes into detail on the HOP grant. Yeah, so the HOP grant is something that Mark will be able to probably give you more pertinent details on it, but the HOP grant is something that we, use to provide down payment assistance for clients or closing cost assistance for clients, depending on the mortgage product in which they're in. It's a $10,000 grant that is forgivable. You have to live in the home and have certain criteria that goes along with it. It is only available to first-time home buyers. Home buyers must contribute a minimum of $1,000 of their personal savings towards closing costs or down payment in this case. And then it uses the household income limit of 80% of the average median income. So it looks like we got St. Joe County there at 43,700. And then you can see the different household sizes as you go up. A household size of 4 is 62,400. So now we've been able to, now you can increase your income and still qualify to use HOP, and then also our community development mortgage. Must have continuous employment for 1 full year. So that's an important part of this. And home buyers cannot be students with part-time or no income while in school. So we are looking for full-time employees that can qualify for this HOP grant.
Monthly housing expense front end ratio cannot exceed 38% of the gross income at closing. So when we combine all of your debts, cannot be more than 38% of the income that you gross. Home buyer counseling and education is required. There are free programs that we, when I originate your mortgage, I send you a link and you complete this course that is done by Fannie Mae, which is a HUD approved counseling. And it's pretty quick, it's pretty painless, and it's really good information that prepares you to be a homeowner. Closing must occur within 60 days of receiving HOP funds. So there is a certain window which HOP funds are open, and we must close your mortgage within 60 days of that. So it just depends on timing of your situation and where you're at in the buying process. They do place a 5-year lien on the property. That's just to make sure that, you know, that home is being lived in, and that, you know, it's not being resold quickly or things of that nature to capitalize on market value. But again, I don't know, Mark, is it prorated? So, oh yeah, it does say
yes,
prorated.
it is.
Yep, so it is prorated. So if you do have to move before that 5-year, it is forgivable year over year. So you don't have to pay the full grant back, you know, right away. It just depends on how long you lived in the home. HOP is forgiven if repayment amount is less than $2,500. So let's say you're more than halfway through, you know, or 3/4 of the way through. If the amount of that you would have to pay back is less than $2,500, it's forgiven. Mortgage must be pre-approved and property identified before applying for HOP. What this means is you really have to be under contract. When I look at pre-approving a client, I look to see, okay, are they going to qualify for HOP? Here's their debt to income. And then it's really finding the home and then timing that correctly with the opening of the grant funds. So you must be really under contract when we go to apply for these grants. Funds are available on a first come, first served basis until funding is exhausted. It does go pretty quick, we've seen over the years. So it is first come, first served basis. So it's good to plan ahead and get pre-approved and start the housing search early, so that once the grant funds open up, you're in line already to get those. Yeah. Mark, you have anything to add for that?
I just have a couple of things, and then
Yeah.
I can kind of lead into our next grant program that we have. But thank you, Jose, for talking about the HOP program. As you may see, we have the Federal Home Loan Bank of Indianapolis logo on this slide and the next slide as well. But First Source is a member of the Federal Home Loan Bank, and the Federal Home Loan Bank provides these grant funds, these grant programs. So First Source has to follow their rules and guidelines, and is to obtain these funds to stay in compliance with the program. So that's why some of these are really pretty specific as far as, you know, income limits and requirements and such. But we obtain the funds from the Federal Home Loan Bank, and as Jose said, there's a window of opportunity for these programs, these grant programs. The HOP program opens in the spring. In fact, March 1st, the first round of HOP opened to provide, you know, $10,000 of down payment assistance. And in that program, the first round is going to close by April 28th. And then a second round is going to open May 15th. So, and a larger pot of funds. So fortunately, this year, the Federal Home Loan Bank is going to have 2 rounds of funding. And in previous years, the funds went extremely fast. I think it's gone a little slower this year, particularly with unfortunately, with the higher interest rates and such on the mortgage for home purchases and such. So the funds are going a little bit slower this year. So, but it is a window of opportunity to consider, if not this year, maybe consider for next year if you're looking to purchase a home. So as Jose said, you really need to plan in advance and have be pre-approved and have a property identified for the HOP program. And we'll be happy to take questions at the end of our session as well. Then the next program that I'd like to talk about is our Elevate Small Business Grant Program. This is a program that provides up to $20,000 per business or per applicant to help grow their business, their small business. This would not necessarily be for startup businesses, but those businesses that have been in business a minimum of at least a year or so, with gross annual revenues of less than $1 million. So again, we're looking, this is for existing for-profit small businesses. Nonprofits, unfortunately, are not able to apply for this program. The business must be located in Indiana or Michigan to qualify. And again, these are Fair Home Loan Bank rules that we must follow since they're providing the funding. And they must also, the business must be under current ownership at least 12 months prior to applying for the Elevate Small Business Grant. So again, the funds can be used for capital expenditures, workforce development, purchasing new equipment, technology, even working capital. So as I mentioned, applications are only limited to one business per year. And the applications are going to be becoming available probably in June. And then we will be taking a look at those in July and August when we need to get those submitted in the Fair Home Loan Bank. So it's a very competitive program. Please be advised of that. Very competitive, oversubscribed. By that, I mean, last year, I believe they had over 100 applicants and only 20 businesses were selected for the Elevate Awards. So we were fortunate that we had 2 of our business clients that were awarded. Again, this is a very competitive application, and you put into it what you get out of it. And it's like applying for a foundation grant or anything like that you need to put some effort into the application. So with that said, the starting process would be to contact or work with one of our business bankers, and that we also ask that you are a current client of First Source Bank, that you bank with us. So and then our business banker will work with you on the application. I'll probably also be helping with the application as well, and working with you on getting that completed and submitted, and then working through, hopefully you'll be awarded and working through that reimbursement process. So again, this is a reimbursement grant. So the expectation is that you would be spending those funds. Once you're awarded, you would be able to go ahead and purchase those items or have those capital expenditures or what have you, and then you would be reimbursed through the grant. So again, as I mentioned, the starting process is working with one of our business bankers who is very familiar with the Elevate program, and get started in that manner. So I guess now I'd like to turn the mic over to Ryan Bell to talk more about some of our small business programs.
Good morning, everybody. I'm here today to talk a little bit more about our small business offerings and spend a little bit of time differentiating those from the general consumer loan, or a loan that we would all get on the personal side. So generally speaking, when you're looking to borrow as a business, there's 3 types of loans. There's the mortgage loan, the commercial mortgage loan, the term loan, and the revolving line of credit. So I just want to take a moment to differentiate all those in a little bit more detail for everybody. So starting with the commercial mortgage loan, obviously Jose talked about the mortgage loans on the consumer side. On the commercial or business side, similar in that it's to be used to purchase real estate. Generally speaking, that's some sort of warehouse, office space, maybe to run even a retail location, so a storefront out of. It's really just real estate to be used for business purposes. The big differentiator on the business or commercial side to that we're all used to as, individuals, or the personal side, is that commercial mortgage loans have a much shorter term than that you're used to on the consumer side. So generally speaking, most people, when they buy their home, look at up to a 30-year mortgage. On the business side, those really don't exist. Most mortgages come with a term of 15 years. Sometimes banks will go up to 20, but that's about the max. So really, when you're looking at real estate, understand that the terms are vastly different than that you would get as an individual home buyer. Term loans, just like Andrea had mentioned with her product, an installment loan, a loan that comes with a fixed principal and interest payment. Term loans on the business side are generally used for anything from equipment, business vehicles, things like that. Also, if you're, say, renting space and you want to do some upgrades to that, You could do a term loan there to do what we call like leasehold improvements. That could be like a build out to a lease space or something like that. The third and a really common product that you see on the business side is what we call a revolving line of credit. So what that is a revolving product where you can draw upon it, so draw funds out of it, and then once you get money received through your receivable base or any client paying you, then you can use those monies to pay it back down. Kind of think of it a little bit like a credit card, and then you'd have that availability in the future to draw upon it again. When we talk about lines of credit, those are for kind of those short-term needs. So maybe if you were waiting on money from a customer and you still need to make payroll, you still need to pay a supplier. It's really to save those businesses that have what we call a delay in the cash cycle. So if you're a manufacturer, you're producing something, you don't get paid the minute you deliver that widget that you're producing. Generally, you deliver it and you invoice them and get paid or 30 or 60 days. So that line of credit can come in handy when every other week you're having to make payroll, or you might have to make your monthly insurance payment, things like that. We don't see them as much in cash businesses like restaurants, salons, things like that, because those folks are getting paid in real time. So I think out of all these three products, the big thing to remain mindful of is trusting your banker, having a collaborative conversation with them to ensure that you get in the best product that meets your needs as a business. Two other products that I'm going to talk about, and Sam, if you want to advance the slide there. The first one is SBA, or Small Business Administration loans. So a lot of us have heard about the SBA, most notably during the pandemic. They're a government-backed agency that assists in lending to small businesses. They were very prevalent starting in March 2020 when the world kind of stopped, and offering different loan products such as the Payment Protection Program loans or the Economic Injury Disaster loans. We're through most of those loans now, and SBA itself is going back to their normal loan program, which has been around since the 50s. So the SBA is out there to support banks in lending to small businesses. What the SBA does is they're not as much a direct lender. Borrowers who get SBA loans still come to a bank to borrow. The SBA is what we call a guarantor. So what they are is they're in the background on those loans, and in the event of any sort of challenges or heaven forbid a default, the SBA will come in and pay the bank or share in a portion of the bank's losses for a business. So banks utilize the SBA loan program a lot of times for businesses that may have a little bit more risk to them than one that's been around for a long time. So, notably a business startup where they just don't have that operating history yet. Anytime that there's a change of ownership, so not having proven ownership, things like that, the SBA is used by banks to be an enhancement to the loan product or help get the lender more comfortable with it. Those are benefits to all of us as lenders, but benefits to you all as borrowers. The SBA allows us to term out or amortize a loan longer. So we go back to like those machinery or those term loans. Generally, those are on 5 years for a regular loan with a bank. SBA allows a bank to go 10 years on those. So that equates to smaller down payment, stronger cash flow for you and your business, and you're able to conserve more capital on a monthly basis. They also put limitations on interest rates, kind of similar to what Andrea was talking about and Jose. No prepayment penalties, this for loans under 15 years. And really that last one, it allows us to fund businesses that may not otherwise be able to obtain financing. So there kind of comes a stigma with things like startup businesses or maybe certain industries that just have challenges. Utilizing SBA allows, lenders like us to support more startup businesses than we'd be able to if we didn't have that enhancement or the government in the background there. So it's really a win-win, certainly for borrowers as well as lenders. And you want to go to the next slide? Mark, do you want to do the minority business builder or do you want me to keep going? Your call.
I'm sorry, Ryan. How about if you just start leading out and I can help chime in?
Yeah, no doubt. So
Sure.
Minority Business Builder Loan Program was a loan program that we as a bank rolled out years ago, and then we kind of revised it in 2022. And I think it kind of goes along with some of the other products that Jose and Andrea spoke about before, where, this might be for on the business side, a first time borrower, someone who hasn't been in the traditional banking society thus far. Their loans from $1,000 up to $10,000 solely for working capital or fixed asset purchases. So they're not huge dollar amounts. We're really working on the business side to help you build credit in the same way that Andrea is on the personal side. Some nice things is there's no down payment. They do have a lower interest rate and relaxed underwriting criteria. So it's a loan that we created, really to regain trust in the communities we live and serve with folks that may, not have a traditional banking relationship, maybe had a poor experience with a bank prior and maybe wrote them off. So we're trying to go back out with that olive branch and provide a product that we really hope is very consumer and small business friendly, regain that trust of our borrowers and continue down and getting that, gaining that full relationship. Mark, you want to kind of tie that all together?
Sure. And again, I believe this minority business builder loan product could be potentially paired with like the Elevate Small Business Grant. We're trying to reach the underserved small businesses and startup businesses, particularly with the minority business builder loan. So again, this MBB is available throughout our footprint. We have certain lenders that will be specializing in providing this loan program. For an example, in the central region, I believe we have 2 or 3 of our small business lenders that will focus on this product, as well as the Elevate grant. So we do have some certain requirements are listed here on the slide about minimum time in business, must meet minority business status and such. And again, the business must be located within our footprint. So again, we are planning to open this product early May. Hopefully, we plan to open it the first week of May, which is National Small Business Week across the country. So we're looking at reopen this program, like I said, first week of May. And we do have a limited amount of funding available, but we're hoping to expend that funding and then be able to go back to senior management and ask for more. So, but we're excited about this product. This will be our second year. We had a pilot program last year where we didn't probably market or get the word out all that much about the program, other than word of mouth and some grassroots efforts. But we're really looking to have a more robust marketing campaign this year. So you'll be hearing more about this product in the next month or so. But did I cover that, Ryan? Is there anything else that might be worthy of mentioning?
No, I think you covered it. And I see a couple questions from Ivan and Rick in the chat just about products. I figure it's a good time just to tackle those. So Rick asked, are the First Source minority business coaches available to work with minority businesses? Rick, what we have are our relationship managers, and I think we consider them, I guess, trusted advisors is kind of the phrases we use with them, and they work with minority businesses, all businesses. Really on the small business side, I think they're really more in a consultative role. So a lot of times they're helping people through not only loan or bank products, but they're helping align them maybe with an accountant that they haven't had, or if they need to speak to someone to get legal advice, they're a facilitator that as well. So I really feel like our lenders kind of serve that role for all their business customers. Looks like Ivan has a couple questions as regards to the interest rate. Interest rate's going to change on a daily basis. That's quoted each day, so I can't give a firm rate on what that is. What I can tell you is it's at least 15 basis points less than what our non-MBB or non-minority business builder standard loan pricing matrix would have. So we do differentiate that and offer a slightly lower rate on that. As far as how much money is available, the program will have $200,000 available in it this year. So if everybody goes for the max $10,000 loans, we're talking about 20 loans there.
Also, Ryan, we have a minimum credit score of 600. I think that's should be mentioned as well.
Yep.
So, and again, no bankruptcies in the prior 3 years, judgment liens or foreclosures in the prior 2 years. So,
Yep. And there'll be more detail so it's not open as of today. I don't know if we mentioned that, Mark.
Yeah, it's not. Yeah,
It'll be open. We're hoping as early as May 1st, but if not, then mid-May for sure. So there will be, like Mark said, a marketing push there. And then Rick, there'll be more details on the application there, but generally the application is a 1-page application, and then they get your last tax return that you filed as a business, and that's all they need to apply for the MBB loan. Collateral depends if you're doing working capital or something like that. They'll do what's called an all asset filing on your business. If you're actually purchasing a fixed asset, they'll more than likely take that. So if you're going to buy a vehicle or buy a specific piece of equipment, these are meant.
Ryan, you worked really hard on streamlining the process so that it's pretty smooth and quick turnaround time. Our pilot last year we thought went pretty well. We had good response from our clients and our lenders. So we really tried to put a lot of thought into this program and really want to continue to grow it.
Yep.
And we had an earlier question too, since we're taking some of the questions now. And then Ivan, I might save your bigger question for the end after we do some of our wrap-up stuff. But does self-employment qualify for the program? And that was mentioned earlier, I think, with the housing programs that you mentioned. So I don't know, I think that came in, Andrea, when you were speaking. So I'm assuming asking about income requirements for your home buying programs. And the question was, does self-employment qualify for the program?
I'll take this one here. Yeah, so for any of our mortgage products, self-employment is okay. We would just need 2 years of tax returns. And what we do is we send those out to a third-party company that does an analysis for us and lets me know how much of that business is making or profiting. And then I use that to qualify the mortgage. So absolutely okay to use self-employment income. I just have to do 2 years of business and personal returns to qualify that mortgage.
Self-employed is also permitted for the HOP down payment assistance as well. Just as Jose mentioned, pretty much same requirements. We would need 2 years of tax returns and a profit loss statement for HOP. So.
Before we jump into the rest of the questions, and if folks have more, and I had a couple comments. One, just talking about local community resources. So one, thank you to First Source Bank for all of you for the great information. We'll jump back into questions in a second. I wanted to mention just the bevy of resources in the community, and interestingly, right, so First Source Bank's involved in a lot of these too. So Ryan and I tend to see each other at a lot of these different group forums and presentations and webinars. So we're always glad to be out doing education. I know one, for me, as someone new into the finance industry, I'm still getting used to hearing terms like amortization, term, basis points. So I also want folks to be able to ask questions about that. And if not, you can also message us and be like, okay, what was some of that speak that they were using, and help break that down. And so also always happy to do that. A couple things that I always like to mention: when CDFI Friendly works with any small business owner in town, one of the first things we start off with is asking, who is your bank relationship with? And one of the things we recommend is that you're with a local financial institution. So many people tell me, oh, I'm with this online bank. I'm like, okay, well, when something goes wrong, who are you going to go talk to? Who are you going to walk into and shake a hand and say, like, what's going on? Or they're with a huge national bank, which doesn't have a branch in our area. And I'm like, okay, so when you're looking for your small business loan and you're trying to do something unique or different or build a relationship, you can't walk in somewhere and shake a hand, right? So here you got a couple faces in front of you of folks that you can walk in and shake a hand and get to know. The other one I'll mention that First Source had in a couple of their programs too, they generally either require you to have an account previous or require you to create an account when you're looking at it. So this is a great reason to have a local banking relationship and to build that and to start there. So we have a lot of other suggestions we give in terms of small ways as your business grows or as your credit needs grow that you develop that relationship, so you don't go from never having a loan to wanting $1 million loan, right? So it goes from having lines of credit, having a business credit card, and developing as an organization with a financial institution. And then your financial institution, in this case, if it was First Source Bank, they know you. They see your bank statements. They know how your business is doing, and are not just more willing, but just like they know your information, so it's better in that relationship than going somewhere brand new that doesn't know anything about your business. So it's a great way to build a relationship. The other thing that CDFI Friendly does when groups reach out to us, which is why we started doing these webinars, when a small business reaches out to us, we're always looking for the best resource. So we help connect people to unique financing programs. Businesses need help with business plans, financial projections. There's a lot of different organizations in town that can do that. And I'll use a great example. We're talking about this competitive business grant that First Source Bank can help you with. And so that's something that it's going to take a team, right? It's going to take a group. It's going to take a lot of effort to get your application ready for that. And so working with one of these organizations, talking to someone at First Source Bank well in advance of the deadline, looking at what's required and helping make sure you put your best foot forward. That's something that takes time, and that there are a lot of people in this community that will help you work through that process, and we can help make those connections. So I always have this slide. This is just a small list of some of the CDFIs and local organizations that provide technical assistance to small business that we would love to connect you with. The other one that I'll mention, First Source Bank talked about their credit builder loan. There's a lot of opportunities for that, and this is something that you want to do well in advance of needing it. We just posted a video the other day when I was presenting to the Entrepreneur Bootcamp. You can't wait to build your credit until the day you need it, right? You've got to start building it in advance. So look at these programs and take advantage of it now, because if you want to buy a building for your business in a year and a half from now, you've got to start putting the steps in place today to try to make that happen. You can't wait until a great building comes up right in the place you want, at the price you want, and then try to figure it out. So let's try to do those things in advance, and we're here to try to help with some of those connections. So we'll jump back into questions. If folks have other questions, I know I had a couple things that I might lob out to my friends at First Source Bank, as we've still got a little bit of time here. So Ivan had the question here.
Yes.
And I know, Ivan, you had some trouble and you joined a little bit late here. Don't know if specific examples were given as to who qualifies for these products in terms of the numbers. What meets their needs as a bank? Is there a gap? If so, will the banks expand their services to help small businesses meet the gap, like the SBA guarantee program? How do the banks have an appetite to take a little more risk to help communities thrive? And then kind of last comment there was the SBA is great, but just wondering how banks are taking on a little more risk.
Yeah, so I'll go through each of these and try to answer them in detail. Marky, I might have you jump in on a few of them. But as far as don't know if examples were given, if we're talking about specifically the business side, I should have put this in my presentation, but it's really gray area. For most business loan products, there isn't a minimum credit score, number of years in business, et cetera, then you're automatically approved. What generally happens, whether it's the SBA or non-SBA on the business loan products, is they get your last 2 to 3 years of tax returns, generally what they call a personal financial statement, and a credit underwriting department does an analysis of the loan. So there's not really any set criteria there. What I would say is the financials should support the repayment of the loan. Otherwise, we're putting a loan on the books that we're showing can't be repaid, and that doesn't do anybody any good. But I think it's most important to whoever your banker is, whether it's us or anybody else, to have that conversation with them and understand their underwriting guidelines there in more detail. As far as the second one about meeting the needs of the bank or meeting the needs as a bank in the SBA loan program and knowing what they're doing, I guess I look at it, having been at the bank, quite a bit of time, is, I feel like we're pretty good at supporting small businesses, that Elevate loan program or grant program. If you go back to the award winners year over year, the only ones that have been in Northern Indiana have been supported by First Source Bank. That's something we're very proud of. I don't think the average folks even know about the Federal Home Loan Bank programs, and Folks like Jose, Andrea, Mark, and myself try to promote them as much as possible because a lot more of it goes to Indianapolis. So we get kind of left out up here in northern Indiana. The good things that, in the comments here about the SBA, that's absolutely true. But those loans are coming from banks. We're the ones having those conversations. We're the ones working with the business owners. The SBA sole involvement is really offering a guarantee in the background. So I think anything that we're proud of the SBA that they've done is a reflection of those lending partners. And I think, we really are proud of our SBA lending. I certainly am, having been, us, the top lender in the state of Indiana the last 10 years. I think that's really a commitment to small business and our support there. Mark, I know you have a report that would blow anybody's mind of the things that we do in small business and the support that we do there, because you're required to report it. So you could probably provide more context there. But before you jump in, as far as, the risk that the banks are taking on, that's certainly a fair question. I guess what I would say there is, lending to startups is risky. That's a big thing of what the SBA is used for. And there's a lot of banks that shy away from startups. They don't have an operating history. They don't have proven management. So there is a risk that's taken on to the bank. Some of the other loan types, people doing things like leasehold improvements, like I spoke about before, or an acquisition loan. There's what we call or consider a big collateral airball or deficiency. Banks are for profits and they're selfish and they want to be collateralized as much as possible. But most of the SBA loans have very little collateral. So that's a big risk that banks are taking on as well. Again, I think that, with the SBA, there's certainly risks taken on by everybody, including the borrower, going with a dream and wanting to start a business. But there's also benefits to all parties as well. I don't know, Mark, if you have anything to add about our kind of support in the communities with small business.
Sure. I'm really proud of the fact that, we utilize pretty much all the Federal Home Loan Bank grant programs. We make those available in our communities throughout, all of our communities. And some of the participating members of the Federal Home Loan Bank, they don't utilize those programs or make them available. So I know we're really proud that we offer the Elevate grant and as well as the HOP down payment assistance. And they actually have a couple of other grant programs that we're very active with on homeownership side. But very pleased that, that we're able to bring these to our community, to South Bend market. And we really like to utilize them more as much as possible. I think Sam hit on a point that, when you're taking a look at these grant programs, you need to put your best foot forward. What you put into it's what you're likely to get out of it. I mean, we've had some nice applications that have really been thoughtful. They have a business plan in hand, able to provide that, and they have goals to expand and grow their business, and those have been the ones that have been selected for the grant funding. So it's again a very competitive process, and we encourage and help coach businesses. But to just simply state, you want to grow your business, please provide X amount of dollars, and so we can grow. I mean, that's probably not going to be a successful application and be awarded funding. We're really looking for businesses that are committed to having a business plan in hand and really thoughtful in how they want to grow their business. So, but we're really pleased to bring these programs to the community. We really want to grow them and see them expand and help our small businesses as well as home buyers as well.
So we got a couple questions here and we're getting short on time, so we get some short answers here. If we already have a business account with another banking institution, can we open a personal checking account with First Source and be eligible for the business grants or loans?
What's your experience, Ryan, with that?
So for the minority business builder, I believe they have to have been a customer for
A minimum of 1 year,
preferably
preferably.
minimum 1 year. And I believe that was also what was on there for Elevate. I don't know the other two programs. I know, or I should say with Jose, they'd be subject to opening a checking account. And Andrea, I believe the same with yours.
Yeah, that's correct. It's just a checking account for me.
And maybe a follow-up question for that would be, does it have to be like their primary right away to start? So multiple businesses have a lot of different checking accounts. So I think that that could be something they could have, that it's different accounts. Does it matter like how much is going through? Like, I guess that's maybe a follow-up question. And if they get the program, then maybe they would move everything over.
Yeah, I mean, I think we see that, quite a bit. I mean, we ideally want it to be a primary account, right? We want to be their full service bank, but we understand the need to diversify. So the hope would be that we impress them, or we come through with the loan, or what have you, and then we do become that primary account in the end.
There's another question from Rick Williams. I've reached out to First State Bank in Michigan to do a loan project with the Federal Home Loan Bank in Indianapolis and bringing in LISC. So I'm not sure the question there, but I'd be happy to connect with you, Rick. So we work, LISC is a CDFI in Indianapolis. We've worked with them with CDFI Friendly. I know First Source Bank would have a relationship there as well. And we could definitely follow up with a conversation with that offline. And then so Rick had another question. Why is it important for small businesses to nurture meaningful relationships with the bank representatives? Is it helpful for small businesses to partner with mentoring companies to grow their business? So Rick, for me to answer maybe for First Source Bank, and I'm actually going to put your guys' contact info up. We had that last, right? So, so if you want to contact people as we answer questions, you can jot down these email addresses. Once again, the full video of this will be shared, and we'll put it out on our social media as well. But I also, so a couple things maybe on Rick's question is the conversation around relationships with your financial institution and growing your business. I do want to rewind back, right? Several of the programs you'll see that either don't support startups or like groups a business to be around for a year prior to starting. It is where when I meet with people who reach out to me saying, I'm thinking about starting a business, is you need to go ahead and get started, right? If you're thinking about it for 3, 4, 5 years and doing get started, work with a business coach, get connected with one of the resources we've mentioned before, or we can connect you with somebody else. Get your LLC, get started, start it as a side hustle, do it on the weekends, track that income. Because I also see a lot of business saying, well, I've been doing this for 3 years, but just cash on the side. I'm like, well, none of that counts, right? So run it through a bank, pay your taxes on it. Then once you've grown, you'll be able to seek financing. So those are some of the reasons why it's important to be banked, to have a financial institution that can grow with you. And if your financial institution isn't serving you, then move your money, right? I also tell people that. It's important for you to find a place that is going to meet your needs. So that's something I think is important. And working with the mentoring groups, I had the slide up earlier with a long list of those. So I think, Melinda, your question was similar to the other one. And so I think we'll move on, that it's important to try to do both with organizations. Most places will have, really either, you can have an account that doesn't take a whole lot to get set up and get going. And then Rick, most definitely, follow up. We'll talk about if First Source will do the same. So I didn't know, Mark, if you had any wrap up before we're almost at 11 here. We can spend a couple more minutes if people want to ask questions. I made my kind of end comment there that I wanted to make.
Sure. But again, thank you, Sam, so much, and to CDFI Friendly South Bend for hosting us today to talk about some of our flexible loan programs and such, and grant programs. So really appreciate it. Again, please reach out to us. You have our contact information if you'd like to ask some additional questions. Otherwise, I don't know, Ryan, Jose, Andrea, any last comments?
No, just appreciate the opportunity to speak to everybody, and they have our contact information. If they have any questions about any of the information after the session, feel free to reach out to us.
100% agree.
Yeah, I'll add that, there's grants out there. There's affordable housing out there in the city of South Bend. It's a good time to become a home buyer here in the city. So thank you for hosting, and thanks for having me.
So I'd like, from CDFI Friendly South Bend, I'd like to thank everybody who joined us today. I know some people had a little trouble joining, and then some people were getting booted in and out. I guess there's maybe some connectivity issues today too with Zoom. There might be something going on there. But thank you everybody for joining us. I want to thank the staff at First Source Bank for your support of CDFI Friendly South Bend, but for this great information. It takes a little while for the cloud to process a video this big, but we'll probably get this on our YouTube channel sometime over the weekend, and we'll share the link next week. anybody who was registered for the webinar will get a link emailed to them. So you'll get that directly, and you can feel free to forward that to other folks, or watch for it on our social media page. We'll post it on there as well. So thank you again, everybody. It looks like the sun is peeking out a little bit here today, so try to enjoy some of this nice spring weather, and we will see you later. Thank you.
Thank you.